Good afternoon. For the DPP Grain Desk, this is Duane Lowry. It is Sunday, May 19th. I'm not sure what to talk about as the main storylines that will be driving the markets here this week. We've got, certainly have to talk about weather. It's that time of year. Um, Rains have begun to move into the Midwest here this weekend. That process will continue to move through the Midwest, probably at least into Thursday or Friday. To probably get 90% coverage precip out of the rain event for this week. There's another system in the 6 to 10 and another system in the 11 to 15. Planting progress the last few to several days has been very aggressive. I think the areas probably that will be most lagging behind normal from this point forward will now be in the far northwestern part of the Midwest. Planting progress was active and aggressive. We still have, it's still later than normal. We still have some acres left to do, of course, but I think the market will probably look at rain, generally speaking, as being somewhat favorable. The what temperature outlook is warmer, so that's favorable for the crops that are in the ground. So the trade wants to be bearish, has been bearish, so everything is slanted towards looking for the bearish side of it. And I imagine that's how the trade will want to come in here tonight, is try to lean everything to the bearish side. However, there are other factors here at work. If you're watching the wheat market was down on Friday. It was weak. It was weak most of last week. But the southwestern part of the U.S. hard red winter wheat belt is dry. The wheat conditions are very poor. Yield losses are a certainty. You've got basically a hot and dry forecast during the next 2 weeks for much of that region, so that crop's not going to get any better. The marketplace is largely wanting to ignore that, but I think it's something that at some point in time starts to gain more traction. Technical conditions in all these markets are such that they warn not to embrace recent weakness. That includes wheat as well. If you look at the corn market, it's been well supported in the old crop. The new crop has suffered the brunt of the selling and the price weakness. Beans, trader sentiment's been bearish for quite some time, talking about either more acres or South American supplies or larger global supplies. Take your pick, but there's always been some sort of a bearish slant towards the rhetoric in the beans. However, Friday's close in July beans is the highest you've had since going back into March. If you look at the November contract, which has certainly absorbed a lot of the selling in the bean complex, talking about more acres and corn acres switching and southern crop areas switching to beans and things of this nature, there's been a steady flow of bearish sentiment towards beans, especially new crop. But you've got old crop beans at the highest levels you've seen since March. You've got November beans that, with Friday's strength, which was only up 10 cents, that managed to produce the second highest close you've had since early April. So the technical conditions warn that there's a short covering event ahead of us, and the price bearish trade sentiment certainly is vulnerable to some sort of a turnaround in prices, which I think has already shown itself in old crop corn. It's already shown itself in old crop beans, and I think it's beginning to show itself in new crop beans. So there's 3 out of 4 key markets that the grain traders are watching that the market is not performing the way the bearish sentiment would suggest that it should have. And whether they see it yet or not, I think there's becoming a more tired storyline about embracing this bearish sentiment. Remember, the bearish sentiment is driven by end game probabilities or possibilities and final yield analysis and large carryout and things of this nature, all based on what happens in the fall if we get a good crop. Well, we've got a lot of growing season ahead of us, and at the end of the day, all we really trade here is money. And the July corn, July beans, all are trying to work against the bear here. I think the November contract of beans, which has absorbed a lot of bearish sentiment, is not performing the way the bears would want it to be, and I think that you're on the verge of seeing a more broad-based short covering event that takes place here. So I think as far as tonight is concerned, I wouldn't be surprised that we see mixed expectations, and I wouldn't be surprised if there's a leaning towards a little bit bearish initially, looking at the weather and saying it's generally favorable, looking at the amount of planning progress that's taken place as opposed to what's left. And I think that may be enough to start some people with the ideas of a little bit weakness, early weakness. However, the technical conditions are very supportive. They strongly warn not to embrace short positions here. And in the case of July beans, July corn, we're in the process of trapping shorts or have them trapped. And I think in the case of the November beans, we're on the verge of unleashing more aggressive short covering there as well. And I think if you shift over to the wheat, short-term technical conditions are oversold. You got dryness concerns and a hot, dry forecast for the southwestern third of the U.S. hard red or winter wheat. I think all of this combined is enough to see buying interest build under the market, not that far below Friday's close. And I wouldn't be surprised that we see a more assertive phase of short covering activity and a firmer price trend develop here as the week progresses. I also think that you've got a situation here that maybe, just maybe, old crop corn has much more upside potential here than anybody is willing to consider. A lot of the corn bulls that have talked about old crop corn have given up hope, basically, and walked away from that market. Yet I wonder if there isn't more upside potential there than what people think. If true, get a little bit of adversity or concern about the crop sometime in the next 30 days as far as weather forecast. I wonder if we don't have more upside potential here than anybody considers possible. In the end, I think it's right for producers to be looking for new crop selling opportunities, but I don't think it's necessary to be selling at current levels, which is at the bottom side of parameters here for quite some time. So look for selling opportunities. I think that we have reasonable chances of getting much better selling opportunities than are presented here today. For the DPP Grain Desk, this is Duane Lowry. Thank you.